a big deal. In the grand scheme of things, if we don't like it, we can change it.
We're at three. It's just a lot. And at a certain point between the practices and all that, it just seemed like that was the number.
With only 22,000 new jobs added. So this is quite a big miss from the expectation. I think was around 75,000. Now the cuts are even more likely to happen, and even maybe a greater, right?
Most of your lending that you get from like a local bank for a home, for real estate development, is typically based off of the 10-year treasury. We just got a participating offer on a property for construction. Participating means like they share in some of the profits too, so they're not just on the debt side. But that was at like 5.75%. The largest stakeholder is usually the bank. Welcome to our weekly Headlines and Project Pearls. Headlines, a segment where we take relevant news stories from this week and share how they are influencing our personal wealth building actions in real time. And Project Pearls, where we pull back the curtain and share real lessons from our real deals. We have a great show today. With me is the Sultan of Smart Money, Dr. Reed Faldet. How we doing, Reed?
Doing good, doing good. Just in the middle of like a home remodel right now. So if you hear like hammering, jacks, like saws, I apologize. It's quite noisy here. And then you throw in a couple toddlers. It's just a constant drone in the background. That's pretty much my life right now.
I think the most important question here, are we on divorce watch or are you and your wife making it through this experience?
It's not been too bad because we built our dental offices.
Okay.
We did the ground up there. So like we've been through kind of that process of choosing and picking things, and we have a pretty good process. I think we're both fairly opinionated, but like ultimately, like we know which party should make that final decision. It's not so bad. We've gotten in a few like driving in the car with the kids, debating over a simple thing like appliances, and I'm just like, it's not that big of a deal. We should,
Not that big of a deal.
it's
Okay.
not that big a deal. In the grand scheme of things, if we don't like it, we can change it. So
I've had like friends, they're cooking on like hot plates in their basement in like the utility sink for like 12
yeah.
months, right? I
Oh,
mean,
that's a long time.
three
Oof.
kids, like that puts a lot of stress on a marriage when your kitchen is a hot plate and a utility sink in the basement.
Oh, it's two things on that. One is we're fortunate that my parents just live like a block away. And so we've been doing dinner at their house because we tried to do it here with the kitchen all torn up, and it just, man, the amount of mental energy you need to find like a pan or this, it's just too much. That almost killed the project for me when they told me like you're not gonna have a kitchen. I'm just like, well, I kind of know that, but like the duration of time is what stinks the most with young kids. Now we're also expecting a newborn in November. And so I was like, can we get this done by then? And now the timeline's looking blurry, right? And so now I'm like throwing incentives. Like I'm like, I'm gonna hire an additional person that'll just help on the job that I'll pay for, right? And
Yeah.
I was like, one of the funny story, one of the on-site guys was like, "Oh, you're a dentist. Do you think you could like make me some new teeth or get me some new teeth?" And I was like, "If you deliver this before November 1st, I will make you some for free." Like trying to incentivize, but
Let's create some alignment. Yeah. That's well, congrats, man. What number is that for you?
number three,
That's what I thought.
because you're at three.
We're at three, and it's just a lot. And at a certain point between the practices and all that, it just seemed like that was the number. I think if it was less stressful with the practices, I think four could have been in the cards. And then also what it does to your wife's body, it's just a lot to handle. So
Yeah,
um,
yeah. I think the first two it was like, okay, that went pretty smooth. And like this pregnancy, she's just kind of like, I'm over this.
I'm
So
over this.
I think everyone who has three kids, it's my theory, is like on the path to four, and you're just like, done. We're fizzling out. Three's good.
Let's just
Yeah.
call it, right? Like it's the same with like dental practices. Like, oh, I'm good at two. Let's do three. And then all of a sudden, like life's miserable, right? So it's like if you're good, why you got to have a strong reason to mess
Push.
with happiness and
Yeah.
yeah. you know.
It's I don't think anyone regrets like no one ever has like 4 or 5 kids and they're like, gosh, I wish I would only had the first three. I mean, I don't think people do that, but at the same time, you're just like, okay, well, we enjoy traveling, right? And like going out to eat and doing some of these things like that. Just adding one more kid is like, okay, 4 car seats in the back and how do you fly and man it's just like the logistics is what really kind of pinch you and then you feel kind of like are we just going to be stuck on our island at our home for the next 10 years and hopefully not but finding that
It,
balance I'm sure everyone kind of goes through that.
yeah, no,
Yeah.
yeah, finding it's so funny how it's so emotional, right? Like such of our life is so logical, and when it comes to kids, you try to apply logic to it, but there's a lot of emotion and
Mhm.
yeah, non-tangibles. So
Yeah.
we're back at school this week, and so all 3 kids in grade school. This is our last year with all 3 kids in grade school, so it's been fun. The kids are having fun. We know most of the parents. It's one of the great things about America, just having that community.
Mhm.
It's such a positive things for the kids in our community. So very grateful for that.
I
Uh,
look forward to those years.
Looking for those years,
Grades.
oh, dude. Once
Yeah.
they're all three in grade, once they're all 3 in grade school, dude, you're like, this is cool. And he's like
Yeah.
one drop off. It's it's a pretty cool thing.
Yes.
Uh,
Yes.
and then you start to know the other parents, the other kids, and so like your kids are fine even if you don't see them, right? Because you know the other
Mhm.
parents and they're either watching or the kids they're playing with are smart kids, right? They don't do dumb stuff that much. Yeah, it's pretty
You don't have
cool.
to just like worry about them dying all the time. When they're like toddlers, it's just like danger, danger everywhere. And
Yeah,
then
yeah,
finally it's like unplug and let them be kids. Yeah,
yeah.
I look forward to those days.
Oh, it's so
Yeah.
nice, especially around like a pool, right? Your kids aren't just going to jump in the pool and like off themselves, right? You're like, you can, like relax. Uh, okay, headlines. We got some great headlines this week. Reed, do you want to touch on job reports?
Yeah, so like so a few different job reports came in and it just looked like August saw a pretty weak jobs report with only 22,000 new jobs added. So this is quite a big miss from the expectation. I think was around 75,000. And so the hope, well, depending on who you are, right, the hope was if it was coming in higher, that there'd be less likelihood that the Fed would cut, right? Because labor market would be doing okay. Because it came in lower, now the rate cuts are even more likely to happen and even maybe a greater, right? So I think the chances of a quarter point is something like 96% is what they're putting the likelihood at. But now it might go up to a 50 point or 50 basis point hike just because of how weak the labor market is. So we'll see, I guess. But I don't even know when that rate cut is coming. Sometime here in September. Do you know the date?
I just look it up and then get the
Yeah.
date, Fed meeting dates. But yeah, sometime coming up here.
Yeah.
Um,
So thoughts on that?
Yeah. So, what's interesting, what's kind of cool about the world is just like with the stock market, you can't predict what's going to happen, right? So you literally can't predict what's going to happen with jobs. You got multiple forces, right? You got AI replacing people, right? So people losing jobs. You got new AI companies that are hiring people. You have people getting deported, right? Which is creating a vacuum for those jobs. Like, oh, we need people to hire here, right?
Mhm.
So then you also have companies like pausing plans because they're like not sure about tariffs, right? You still have like, are the tariffs legal, right? We're going through the
Yeah.
courts right now, and are the tariffs going to get reversed? And so when you're running a large company, it's just a huge waste of time and money to um, to roll things out when you don't know what the rules of the game are, right?
Yep.
And so I think we're in this kind of like
Freeze.
quasi nobody knows.
Yep.
So, but I think one thing you touched on was rates. That's just one thing we like to talk about. Let's talk about rates a little bit. So, one concept that I really started diving into this week. So, if we're cutting rates to slowly here, you're going to see most of the lending, like how does it affect you? Most of your lending that you get from like a local bank for a home, for real estate development, is typically based off of the 10-year treasury. yield. And the treasury 10-year treasury yield is in part Fed rates come into play there, but it's really what people are willing to pay to buy these
Mhm.
treasuries, right? And what we're seeing is rates not dropping super fast on like these long-term um
10-year treasuries
the
versus
10
like 2 year.
treasuries, right? People are like not sure where America is going, right? We have a ton of debt. Like, yeah,
Yeah.
I still want a good return to buy US debt. You guys are not, maybe you're still the gold standard, but there's definitely some tarnish on this gold, right? So we still want these higher returns to buy you long term. But what I am seeing is as the Fed is making cuts here, I am seeing shorter term debt, the interest rates shrink up quicker.
Mhm.
So some debt, especially like construction debt, shorter term, like oh gosh, let me think of some other examples. Construction, maybe like bridge debt. Those are often based off of the SOFR, and that's like the secure overnight like Fed rate. So it's like a what you may see is short-term rates shrink up quicker. We just got an offer on one of our development properties, and if you think about development loans, you go out to debt funds and they want like 11, 12% plus points, right? So it ends up being like 13, 14% total. You find some better debt funds, more competitive, maybe you're at like 8.5%, right? Or some banks that like lending on construction, about 8.5%, which is great. And that is often based off of the SOFR. We just got a participating offer on a property for construction. And participating means like they share in some of the profits too, so they're not just on the debt side. But that was at like 5.75%.
Yeah,
And
phenomenal.
construction debt's usually way more expensive than like stabilized debt, like when you buy a stabilized
Yeah.
property. So what I'm seeing both in the markets, like when I read the news, and then what I'm seeing like personally too, is we all may have access to less expensive short-term debt, right?
Yep.
We like long-term debt. We like the fixed piece of that,
Mhm.
right? You fix something for 30 years, that's amazing. A lot of benefits that we talk about here, but there may be some opportunities here with the short-term debt to do some cool things. And so keep an eye out for those opportunities. We'll talk more as they pop up. So
Yeah. And hopefully, just if you think about short-term debt, if that's whatever short-term defined as 2 years, 3 years, something like that, more projects can get started, right? At least companies are like willing to maybe take the risk on a new project potentially, or actually build something. So maybe
100%.
that'll be, yeah, so that'll be a little bit hopefully stimulatory if we're talking about jobs reports being not great, right? But then if we have short-term debt, it's a little bit lower. Maybe that'll help get some projects off the ground that otherwise wouldn't if rates stayed high. So yeah, we'll see how that pans out. The other thing was we wanted to touch on quick because it's interesting is people are talking about gold prices surging right now. I don't hold any gold, but what are your thoughts on gold? Do you have a big stockpile buried in the backyard or what?
Yeah, I do believe in liquidity, right? You just never know if bad something's going to happen. So having liquidity is great. And gold is pretty liquid. You can sell it at usually a decent price and get some cash, right? So I'm a fan of liquidity. But when you hear all these advertisements of like buy gold, it's a distraction. Okay. So the value in gold is 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 the value of assets. Oh man, this is a hard concept. Okay. Oh man, Reed, do you have a better way to explain this? I know we were talking about this
So
before.
here's well, so I guess I mean just like anything, commodities, gold, stocks, like it's only going to trade at what people are willing to pay, right? The price at the end of the day, right? There's not as much utility in gold. There's not as much. It's just like what people will pay for it. But here's what I'll say, and then maybe you can it'll
Yeah.
your head is I once heard Warren Buffett talk about gold, right? And if you why doesn't he invest in gold? And he said something like if I owned all the gold in the world to be worth, I don't know what he said, 2.5 trillion or something like that at the time. And he said it would be this, I don't know, 30 by 70 square foot block. And he's like, what does that do for you? What does that produce for you? And he said, for the same amount of money, I could own the majority of the farmland in the United States, right? And like, what
Yeah.
would that produce for me? So I think when I think about owning assets, I like to think of like producing assets, something that is actually producing
Yeah.
an income
Value.
source or value versus just like something you hold. Even if the
Yeah, let me
price can
try to
go up
explain
and
it
down.
one more time. Yeah, so if you bought 100 assets, different assets today, okay, some corn, a car, a house, a
Mhm.
boat. I don't know if those are all assets if you
No,
call them
they're
that,
not great
but
ones.
a cell phone. Okay, you bought all of those things, right? Yeah, 100 different things today. 5 years from now, you buy those same 100 things. Some of them are going to like increase in value, some are going to decrease in value. They kind of go up and down. Okay, but you're buying those same 100. It's kind of how they track inflation, right?
Mhm.
Buying gold is gold just increases in value over the long term. Its buying power stays the same.
Okay. So it's an inflation hedge, you're saying is the main purpose of gold.
It rises with inflation, right? And sometimes its demand goes up, so it'll peak for a little while and then it'll drop. But if you just put all your wealth in gold, okay, your wealth won't grow. It'll just stay the same.
Yeah.
So it protects it from inflation. It just stays the same.
You're saying if you had all of your wealth in gold, inflation adjusted, it would not grow, right? That's what you're.
Inflation adjusted, you could buy the same thing if you spent all that money that was in gold, whether it's today or 50 years from now, you'd be able to buy the same amount of stuff
It's the
with that
staying
gold.
power. Yes. You're just,
Yeah.
it's the staying power of gold.
So
It's not going to make you rich.
the only way you make money off of gold is if you're trading gold, right? Which is buy low, sell high, right? And
Yep.
who makes money trading gold? Well, the research says nobody makes money trading stocks over the long term, right? So who makes money buying and selling gold? Uh, Possibly nobody as well, except for the
Yeah.
guys earning the commissions,
Yeah.
right? And so whenever I see buy gold, gold is hot, all this stuff, sales, distraction, like ignore said
Ignore.
stuff. Now, if somebody wants a little bit in their portfolio for liquidity, right, it just makes them feel good. There's risk in the US currency, right? There's risk in any currency, right? But gold doesn't have like specific government currency risk, right? So when people say, gosh, like I lived in Poland, I grew up in Poland, and inflation all of a sudden ran away and all our assets got devalued and all this stuff, all our money in the stock market it just crashed, right? So I've talked to people who grew up in countries where things have crashed and they like gold because they've
Sure.
seen just things implode on them, right?
Yep.
So yeah, I think gold in countries where you're just really unsecure about the currency, right? You just don't know what's going to happen. Man, I think that's good. Like protect the value of what you have.
And
Um,
that is kind of the impetus behind Bitcoin a little bit as well. But we don't need to go into a Bitcoin.
yeah,
But that is kind of the similar digital gold preservation of
very
wealth.
similar,
Yep.
very similar in
Separate
many
like
ways.
fiat currency. Yes. So okay.
Yep.
All right.
Last piece here is, the Intel piece again with the U.S. government awarding Intel a bunch of money, but then saying, okay, we're actually only going to give you that money if you give us like a piece of your company. Um, the sovereign wealth funds have worked well in other countries. This exact didn't exactly work out like this, and we know historically, you know, governments investing in private. In U.S. history, I mean, China, I haven't dove in too much into that. But in the U.S., historically, the track record has not been good. What are your thoughts?
Well, yeah. I think I talked about this the last time I recorded a little bit. I kind of feel a little bit divided on it, right? In the sense that I like that the the government right now has a little bit more of like a business mindset, P&L, balance sheet, balancing the budget, trying to make us profitable, right? Instead of running in a deficit. And it's in trying to do that, they're trying to find any points of leverage they can to secure more equity for the American people, right? Like that's cool in that concept. But where I'm a little negative on it is worrying about what does it look like at scale if the government tries to do that and continues
No.
to buy up equity in publicly traded companies. And what is that going to look like? Now you have one of the biggest um, allocators of capital, right, that are getting into the private sector that are really in service of the public, right? So it seems like there just might be a few I don't know, conflicts of interest, right? And so we'll see how that looks. But yeah, so I'm a little bit divided on it.
Uh, yeah, and I mean, if you're running a sovereign wealth fund like an investment firm, right, and on average, the investment firm matches the stock market 8% or something, right? Um, that's better than investing in T-bills like we talked about with Social Security money, right? So I'm for that if they run it this way. But like
Mhm.
these dollars were awarded to Intel, not based off of like an investment firm doing underwriting and whatnot. These were awarded, through like I mean, grants application, and then like now it's just it's not a healthy way to invest, right?
Yep.
And when you look at like government efficiency, I mean, one of my buddies posted an article in the Seattle Times. It's like Washington State. Um, Labor and Industries computer system upgrade has taken 10 years, spent 30 million, and has not left the planning stages. And has another 292 million and 9 years to go. So we know technology changes like this, right? If you're not implementing a technology plan within like 6 months, it's like outdated like immediately. So, and then you also look at these government investments like in the past, like it haven't worked out. So yeah, I'm pretty concerned. I feel like it's very concerning for our country how we do this. We do a sovereign wealth fund with like smart financial managers. I'm like, okay, we're probably at stock market returns, which is better than T-bill returns, and we're saving money and we're investing money. I'm like, that sounds pretty good, right? Those are good habits to have. If we're just awarding money through like grant programs and then taking shares of corporations, like that sounds like a good way to lose money. So I would probably take the contrarian bet, right?
Yep.
I'd be taking long-term shorts on Intel. Like if the government's putting money into Intel and the government typically loses, let's bet against the government, right? I mean, that's like my first instinct. I'd have to dive in and flush that out a lot more before I would put my like, bet on my instincts, but
Yeah, yeah, I'm with you. I mean, don't you think that if there was a sovereign wealth fund, I'm not saying that I'm, I'm no hedge fund manager or anything like that, but I could probably get a better return than the government's getting in most of their programs, right? Like investing in the T-bond. So in that, and we're imagine the sophistication of people that could be in that role helping if this was a true sovereign wealth fund, like you said. So, but I don't, the government doesn't historically do a very good job of allocating capital and resources. So let's not double down on that. Yeah.
we have to set it up like a private corporation.
Yes.
Okay,
So
Project Pearls. One of the big pieces for us is giving real shares about real things that are happening to us, right? And that we feel like that's the best way to teach. Read what Project Pearls you got this week?
yeah, so we have two new deals under contract, and so we were just kind of reviewing the underwriting on those deals, both multifamily deals in the Kansas City market, just kind of our sweet spot. One though, we found out, and this wasn't the intent, but we found out it is in an opportunity zone. So it was already a good deal, right? And so we're just kind of exploring what that would look like if we want to put together the correct legal, right, entity structure to do the opportunity zone. I think you can do it like in a fun type structure, don't you?
Yep.
And
Yep.
yeah, so
I
we have
would
this.
layer that. Take the take the incentives from the government, right?
Yep.
Key here is for you guys, it has to be heavy value add, right? So if you buy it for 1 million, you got to put another 1 million into it. It can't be light value add for OZ.
What constitutes, is it just a hard value as a percentage? What constitutes heavy value add?
Yeah, they're really it's a double
Really?
number. So if you're buying it for 1 million, you got to put in another 1 million worth of
Okay.
value add.
Okay.
So if it's one of those deep discount ones, you're like, wow, we're gonna have to do a lot of work.
Perfect then.
So,
Yes.
uh, I would definitely do that. And then also size, right? If it's a smaller one, right? Then it's like, I don't know if we want to like set the whole thing up for just, $1 million property, right? But if
Okay.
it's 2 million, 3 million, 5 million, and you're putting a lot of money, then 100% makes
Worth
sense.
it. Yeah,
Yep.
because everyone benefits, the investors benefit.
Yep.
So us, we benefit. I don't have any specific capital gain to roll into it right now, but I'll have to think on that a little
If
bit.
you have a capital gain and you like investing in real estate, it's a no-brainer. And then
Yep.
it's also got to be long-term mindset, 10-year hold, right? If you're
So
doing shorter than that, it doesn't make sense either.
So here's kind of the play right now we're looking at is probably could do like it's gonna be heavier value add, but I think
Yep.
we can do like a 15-month cash out refi. So and then
Yep.
into perm debt, and then we
Yep.
could probably cash flow for 10 years to hit that time horizon for OZ. And I think that'll be like the perfect setup, right? And maybe get a 2.5 to 3x multiple on that. So yeah, that's kind of what our tentative business plan is. Things check out.
I think that makes sense. Yeah, because all the cash flows, all the cash out refi, that all works like a non-OZ. So I think you're on it.
Think about it like this. We were thinking, oh, it's so cool. Is so say I have a $200,000 capital gains and I invest in this property, right? What if we could do 100% cash out refi in like year two, and you
Yep.
essentially get your capital gains back, but
Yep.
you leave it and then you just for 10 years cash flow off of that, and at the end still not have to pay anything on that, and work around that depreciation recapture as well. So I think that's such a cool idea. It's like I'm just going to put it in for a second just so I can get it back and let it grow.
That's it. So you put in
Yeah.
your 200, you get your 200 back in, let's say, 2 years, right? Now you own it on zero cash, which is infinite return, right? And then 10 years later, when you sell it, no taxes. It's like a Roth,
Yep.
right? This is no brainer. So yeah, I know you, smart guy.
I'll let you know how it works out. You're the OZ guy, so I might have to pester you a little bit more. But
Yeah.
I'll do some preliminary research on if the numbers make sense in the first place. So what do you got? What's in your corner this week with projects?
Yeah, I think one of the things that really set home here, so I got about 8 projects going locally. Um, I think the fun one, this one is I got this impact investing one, right? It's income restricted on some of the units. It's community impact, right? We're supporting some of the units are for homeless, home insecure families. So families that have been like kicked out of a home or trying to find a home, and I have a really good partner on that. They are a nonprofit. They have like a 92%, greater than 92% success rate at keeping families in homes, right? So you're working like, it's just kind of fun to do like a community impact project and work with the cities, work with some nonprofits, work with neighborhood council, city council. This is new to me, right? We did some nonprofit community health work as a dentist, right? A lot of our rotations were at community health centers. It's just kind of fun to do these projects. And some of the guys I'm talking to are like the presidents of the largest banks in our areas, right? And these guys are like really cool, like smart people, right? They live like amazing lives and they're just so sharp, and a lot of their friends are like super interesting, like smart people, just real
Yep.
people, right? They're real. They talk crap to each other. They're funny. Anyway, so it's been real rewarding. So I guess I would say, as dentists and as we're doing real estate projects, don't shy away from like government and community impact projects. I
Mhm.
think you can have a lot of fun with it, meet some really cool people. and do good, doing good. So
Yeah. I mean, it's such a cool idea that a few things. One is that like you always have to generate a return for your time to go through this project, right? But if you can also make an impact, like you're talking about impact investing, right? You can make an impact on your community. If you can actually see the lives that you're improving by doing this, right? Then it's like, oh man, it's a win-win. Like, sure, it might fill the bank account, but also fills the soul a little bit too, right? And so you're getting a lot of different benefits from doing it, helping a lot of people in the process. I mean, the value isn't just building a building, right? It's housing for people that need it. So there's a lot of cool things there. And then the second part of that is, and I've learned this over time as well, it's just like doing real estate and trying to do bigger and bigger things, like it forces you into different circles of people that you wouldn't have otherwise got to meet. So, and you just all of a sudden like talking to some person, you're like, man, this is cool. Like I'm talking to this person. Why else would I, as the dentist, private practicing dentist, I would never interact with this person had I not done this project. So I think it's cool in that sense too.
it's great. And I think like the largest stakeholder is usually the bank, right? In any deal, usually around 75% of the money comes from a bank, right?
Mhm.
But a lot of the seed money, as I'm learning about all these different government programs and incentives are out there, right? That's like the seed. So if you think
Mhm.
about a project, let's say it's 10 million, banks bringing 7.5 million. A lot of these government projects, 1 million, 2 million could come from the government, right? And so you're not putting as much cash in, right? So you don't have to hit the same like return metrics that you would have to have because the government's like involved in contributing. There's a lot of paperwork. I mean, there's drawbacks there, but it's kind of cool. Like seed money from the government, and then like the lending is at lower rates. The banks could actually be equity partners too, because they don't have to play by the same rules because these are like special programs, right? They're incentivized by the government, so they don't have to play by the same rules. They can be more flexible with you. Um, and then there's other like the parks department, right? Like there's like cool people who are just trying to build like cool spaces for people to play and fun, right? They want to get involved, and you're just like it's just really fun. And as much as like we don't like the inefficiency of government, right? Like almost every time when I meet a like government employee, this is like a cool person who cares, right?
Mhm.
Like the structure of the government may not be super efficient, but the person, every like almost everybody I talk to is like super awesome. Their heart's in the right place, and they work hard, and they're smart. So, so it's just kind of interesting. I don't want to, I want to say that about like these folks I've talked to, but the reality too is like I just talked to somebody who was like one of my favorite people at our city government. She's just so smart, so wonderful, and I was chatting how things are going with you. She's like, yeah, well, she's like, I'm on my third what's it like document storage program, right? She goes, every time we get a new, mayor in here or whatever, or
Yeah.
new government, they all want to use their storage program that they like, right? For documents, whether it's Microsoft or Google or whatever. I don't even know for the government what the different options are.
Yeah.
But it's just like, it's just so funny, right? I mean, this is how our government is kind of set up, right? It's like you vote people in, new people all the time, right? Which is great. So we don't have like monarchies, right? You have
Yeah.
democracies, but then the challenge is like you're trying to get stuff done, and you're constantly have to change something because you got a new leader every two to
Yeah.
4 years. Yeah.
It's I mean, imagine if every private company changed the CEO every 2 to 4 years, right? Like, can you imagine what that would do to the private sector? You would not be able to get any core alignment or traction on anything. And then we wonder why things move so slow in government. I mean, it's just kind of the nature of the design. But
We are
yeah.
right for a new government design, right? But who's going to figure it out? And how are you going to get people to actually sign up, right? The fear, right? It's worked for 200 years, but we know every civilization falls, right?
Yeah.
And so you have to evolve or you will fall. Uh,
Mhm.
but there's risk in that. And most people are not risk tolerant. So
especially within government, right? Their job, they don't want to be so disruptive as to cause and break things to then have to be voted out, and then new person comes in. So it is you're not incentivized to disrupt and break things when you're in government.
no,
It's
it
just
has to be broken. So this debt, this national debt issue is going to be really interesting because the only thing that's going to get us really to focus on it is if it breaks.
in the impending doom that we are like about to go off the cliff. Like, and people, it's just math, right? That's they can say Social Security is going to be bankrupt at this point, right? Medicaid, Medicare is going to be bankrupt at this point. When you can just look at math and project out where the timeline is, that puts pressure on people to get the problem solved. And before, people would just kick the can down the road. Now it's like that cliff's getting pretty close. We better do something about it. So hopefully that aligns people enough to get something done.
People, most people make decisions on minimizing their pain, right?
Mhm.
And so you have to make the pain strong enough for to get them to change course. Uh, yep, that's
Yep.
well. If you want to engage with us and learn more, come visit us on our Facebook group, Dental Real Estate Partners. We'd love to chat.